JP Markets is fighting back. The CEO of JP Markets, Justin Paulson, just posted on Instagram that they are fighting back. Are they coming back? Is the FSCA going to win this one? Find out in this video. Hello and welcome to the Pine Street Capital YouTube channel. My name is Ron and I am the managing partner of Pine Street Capital. I've been in this industry for over 6 years and today we are going to be discussing a very interesting story that's been raveling over the past year or so, and that is JP Markets. From the comments that I see on Instagram, there are really two camps on the JP Markets argument. And what I usually find is that a lot of the people who have very strong opinions on this topic either misinformed or uninformed. And what I'm here to do is, well, I'm not here to bash JP Markets, and neither am I here to be a JP Markets evangelist. I'm here to give you a balanced argument from both perspectives, and at the end of it, I'm going to share my opinion, which you're more than free to agree or disagree with. So here's what happened. Early last year, JP Markets had their license suspended as a result of multiple complaints that were filed to the FSCA about multiple trading disruptions and withdrawal delays. And as a result of this, JP Markets was not allowed to conduct any new business. The really interesting part is what the definition of new business actually means. And this is what I think happened within JP Markets. They interpreted the term new business as meaning any business that they conduct with new clients, right? But in actual fact, the FSCA actually meant they weren't allowed to conduct any new transactions with new or existing clients. Nonetheless, JP Markets did conduct new transactions with existing clients, even though they weren't onboarding new clients. The FSCA saw this as defiance, so this is when they decided to move on having the company liquidated, having their bank accounts frozen, and having their license withdrawn. And to put the cherry on top, they decided to have Justin Paulson, the CEO, disbarred from the financial services industry. The High Court sided with the FSCA and filed a court order to have JP Markets liquidated. And this was in September, but nothing really hit the headlines until the 30th of July 2021. So the Moneyweb article reads, JP Markets asks the SCA, which is the Supreme Court of Appeal, whether the regulator was right to shut it down when it wasn't insolvent. And the main points I get from this article are that JP Markets had bank account balances of 258 million rand, right? And the claims against JP Markets were for only 40 million rand. And the crux of the argument is that the FSCA might be going beyond its regulatory powers, given the fact that the Companies Act only allows for winding up of companies that are solvent only under strict circumstances. And those circumstances are when creditors find it just and equitable to do so. So if JP Markets has 258 million rand in their bank account and creditors only have claims worth 40 million, does it really make sense to have the company liquidated? Is it in the best interest of their creditors? So now we're going to look at the arguments for and against JP Markets. And I'm not a lawyer, so we're not going to look at it from a legal perspective. We're going to look at it from a business ethics perspective. So the first argument for JP Markets is if their business practices are exactly the same as other players within the industry, why are they getting penalized for it whilst everyone else is able to operate unhindered? When you think about it, it's been an entire year since the FSCA went after JP Markets for basically operating an over-the-counter derivatives business without an ODP license, when 16 other firms have been doing the exact same thing. But when you look at the speed at which the FSCA went after JP Markets, and the fact that it's been an entire year and no action has been taken against any other firm, it almost seems like a targeted attack. And when you look at one firm that they might have taken action against, which is IG, the largest OTC derivatives provider in the world, it almost seems like a lighter touch approach, because IG isn't allowed to onboard new clients, but they're still able to conduct new business with existing clients. The other argument for JP Markets is the fact that they're really demonized for a practice that's pretty normal in this industry, and that's B-booking. One term that was thrown around a lot during that period was that JP Markets was trading in absolute conflict with their clients, right? And that refers to the whole idea of them B-booking their clients when everyone else is B-booking, right? And there's absolutely nothing wrong with B-booking. It gives us retail traders access to the markets at the end of the day. And another thing that was thrown around was the term toxic trader. Within the material that I read, these guys interpreted toxic traders as traders who win money, which is bad for the brokerage. But what toxic trader actually means is a toxic trader is a trader that has any kind of unfriendly flow to a brokerage, right? So unfriendly flow could be a trader who's constantly making money, right, to some brokerages, depending on how they manage their risk. But in actual fact, a toxic trader could actually just be a trader who trades in huge lot sizes just before economic releases, because that then makes it difficult for the brokerage to manage their risk, because if you look at the liquidity from their liquidity providers just before an economic news release, liquidity is nowhere to be found. But if they're a B-book brokerage and they have to provide liquidity to that trader, then they have to guarantee that trader a fill, no matter whether their LP is going to provide them with liquidity for that or not. And there was a lot of misunderstanding around B-books and market liquidity and things like that. So JP Markets was really demonized for something that everyone in the industry does, and there's really nothing wrong with it, because it still gives the clients access to the markets in a fair environment. Now let's look at the arguments against JP Markets. Guys, those emails. Now the emails I'm referring to are emails that were basically shown in the FSCA's application to have JP Markets liquidated. And these emails showed conversations between people within the company about finding ways and terms and conditions within their contracts to deny some of the traders who were constantly making money withdrawals. That really leads you to question the culture within the company as well. Now, the second argument against JP Markets is the almost predatory trading conditions within their A-book, right? And this was also outlined within the application that the FSCA filed to have the company liquidated. So they basically had other conditions that traders who I guess were profitable traded under, and I imagine they used things like the virtual dealer plugin in order to increase slippage and increase spreads more than they would for traders in the B book and things like that, in order to almost slow down the A book traders. I'm not sure to what extent they actually did this, but from the sounds of what was described in the argument, it might have been something that was done to a very large extent. So what's my opinion on this entire matter? Did JP Markets break the law by not having an ODP license? Absolutely. Did JP Markets deserve further sanctions from the FSCA after conducting new business? Absolutely. But liquidation? Why file an application to have a company liquidated when it has 258 million rand in its bank accounts, but total claims against it are only for 40 million rand? All that really does is delay everyone getting their money back. One thing very few people talk about is the employees that may have been affected by this, because if the company's bank accounts were frozen, then that means they might have had difficulties in actually paying salaries. So I said this before, this looks like a targeted attack, and the fact that 16 other firms were operating unhindered at all, and still a year later no real action or suspension of a license has really taken place for this exact same thing. But with JP Markets, they moved very swiftly from investigation to license suspension. Okay, so what actually happens now? JP Markets has filed an appeal, and if they win the appeal, I imagine it's a very smooth process. They have their bank accounts unfrozen, and it's a very simple process for everyone to get their money back, right? But does this actually mean they get their license back and they're able to operate? I'm not entirely sure about that. Okay, so what actually happens if they lose on this appeal? Now, the courts in South Africa have essentially a hierarchical structure. At the bottom is Magistrates Court, then you've got the High Court, and then you've got the Supreme Court of Appeal, and then you've got the Constitutional Court, right? So when you file an appeal, you have to file an appeal to a court that is higher in the hierarchy than the court that actually made the ruling. So basically, the initial ruling for JP Markets being liquidated was made in the High Court, right? And because it was made in the High Court, the next court that you can appeal to is the Supreme Court of Appeal, right? And in theory, if the Supreme Court of Appeal says no, then you can then appeal again to the Constitutional Court. But here's the thing with the Constitutional Court. The Constitutional Court only hears cases that are to do with the Constitution and cases that are of general public interest. And to my knowledge, CFD trading isn't exactly to the general public's interest. So my thinking is that if the Supreme Court of Appeal says no, then that's the end of the road for appealing against this decision in South Africa. And that's the end of JP Markets SA. The end of JP Markets SA probably means we move forward with the liquidation, and it's probably quite a long process for everyone to get their money back. Now, the reason I emphasized JP Markets SA is one thing they could potentially do, and by the way, this is pure speculation, is if the Supreme Court of Appeal is not hearing any of it, they can then just go offshore and then open an offshore brokerage. They obviously won't be able to market to South African clients, but with non-solicitation declarations and things like that, they might then be able to onboard SA clients as long as they don't market to them. But yeah, I guess those are some of the scenarios that I see potentially happening. By the way, I'm just a guy on YouTube with an opinion, and everyone's got one. So we'll just have to wait and see what actually happens. If you've made it this far, thank you for watching. If you like this video, please hit the like button below and subscribe to our YouTube channel. And if you'd like to see more content just like this and other content from us, then join our Telegram group using the link in the description below. With that said, I'll see you in the next one.